Hello guys, welcome to another video. It's Kumo here, your mentor. So guys, today we're going to be doing mistakes to avoid trading SMC or ICT guys. This is the first video for 2024 guys. Really excited for this year. Yeah guys, so we're just gonna go through like the mistakes I learned, like the mistakes I've done in the past and what I've learned from trading SMC for this like past maybe year and a half, I think. Yeah, so guys, we're gonna go through that. Yeah, this is going to be a very short video. I'm not expecting it to be a very long video guys, but then more videos are coming. I'm really excited for this year guys. We're really going to be doing a lot of work this year. Yeah guys, so without any further ado, let's jump into the video. Yeah guys, so what are the goals and objectives for this video for today? So the first objective today I'm trying to achieve is for you not to go through the same mistakes I went through. The mistakes and lessons are not those of a complex nature, but rather a very basic and can be detrimental to your trading career. So all of these lessons are not really complex. They're not complex complex lessons or anything. It's just rather very basic mistakes I did, and something very basic. It's not really like, oh, I didn't know about this and this. It's very basic stuff. If you really know SMC, it's very basic, but it really has an impact on your trading career. Yeah. So the secondly, I want you to become more disciplined, more accurate in your trading, free from emotions and distractions. I want you to be critical and efficient in your trading, guys. Critical and efficient. That is what is needed to trade this. To trade SMC and ICT, you need to be critical and efficient, guys. Effectiveness, efficiency, and be critical, guys. So yeah, guys, let's jump into the first. Let's jump into the first one. The first one is neglecting liquidity, guys. If you know SMC, you know already what liquidity is. Liquidity is the levels on the market where there is a lot of orders, where those orders are the orders that smart money or the banks wants to take out, right? Or they create them as traps. So in relative terms, I can call this traps. We can call it traps. But if you know SMC, you know what I'm talking about. Or if you know ICT, you already know what I'm talking about, right? But it's fine. So the market moves primarily to one level of liquidity to another. That's really important, guys, to understand. The market moves to a certain liquidity, or it creates liquidity and then moves down and can move up to that liquidity. So it creates liquidity so that it can go up again to that liquidity or go down again to that liquidity, guys. What am I talking about? Let me make a primary example, guys. Okay, let me just go over. Let me just do this. Go to another chart and show you what I'm really talking about, guys. If we're just making an example, guys, just a basic example. So the market would create liquidity to go take out that liquidity. Let's say simple double top, guys, and then the market goes down. It's gonna go to this. Let me just do this. Let me just cancel that out. We know that this is a level of liquidity, right? The market is gonna move towards that liquidity. This is a buy side liquidity. Alright, this is a buy side liquidity. Yeah, we know that's liquidity, right? It's a double top. There are many orders over here. We know that the market is gonna come to this double top, to go take it out, to go liquidate the people who are here, who have their sells right here, because we know in common trading they say you must sell on a double top and buy on a double bottom, right? That's the primary knowledge that we know of trading in not even SMC or anything, but trading. They say, okay, double top, when there's a double top, you must sell. So smart money or the banks, They know this, so they're gonna take you out. So what I'm trying to emphasize here on this lesson, guys, is that you must always recognize the levels of liquidity in the market, because if you don't recognize those levels of liquidity, you're gonna be part of that liquidity. You're gonna be liquidated, right? So if you don't know what liquidity is, or if you don't understand the concepts of liquidity well, you must go check that out. You must just request in the DMs, or just WhatsApp me if you want me to explain to you the different levels of liquidity, or you can just learn them off somewhere, or you can join the the masterclass. I teach that too, right? So you can get, sometimes there's these type of levels of liquidity, right? Let me show you. So there's liquidity up here and down here. So you as a trader, you don't recognize the liquidities, right? Let's say you recognize this liquidity. You're saying, okay, there's liquidity up here, so the market is gonna go up here, so I'm not gonna take any sales, because I know these people over here are gonna be taken out, right? So what you do is that you're gonna come here, and then there's gonna be another double bottom here forming, né? And what I've noticed is that these double bottoms, sometimes on a trade like this, there's a certain order block here. So what the market does, oh, sorry about that, it's lagging. What the market does sometimes is that they create these levels of liquidity, and then you're gonna say, okay, the market came to this order block, so it's gonna go up now to go take out these people. But what you don't realize is that within this order block, or this trick order block, there is liquidity too in this order block. So what's going to happen is that before the market goes to go grab that liquidity, it's going to do this. It's going to go up a little bit to trick you out to thinking, okay, I recognize this liquidity, but you don't recognize this one. It's going to go up and then come down here like this to liquidate these people here, and then go up. That's the ruthlessness of the market. If you don't recognize the liquidity, you will be the liquidity. And that's one thing I've learned to notice. Like, just be patient with yourself, and then just recognize the liquidity, because once you can recognize the different levels of liquidity, you can move with the market. You move with the banks. If I'm saying that in relative terms, you move with them. So there are different kinds of liquidity, guys. This is the double tops and the double bottoms are not only the liquidities, the liquidity points. There are trend lines. There are inducements. There are levels on the Fibonacci that are liquidity. Let's say from a certain swing point. What's that? Just do this. From a certain swing point to another, we know that some levels are liquidity, some levels are the premium or discounted zones, like I have taught in the past. You can go check them out in the past videos. I think I've gone across those points, guys. So always, guys, recognize the levels of liquidity, right? The market moves primarily to one level of liquidity to another. Failing to mark out liquidity can get you on the wrong side of the trade, or being the liquidity yourself, guys. So the first thing you must do, learn the different types of liquidity levels that you might encounter in the market, and also refrain from taking trades against the liquidity. Do not think, okay, let's say the liquidity, let's say there's a double bottom, there's a double top, and you say you're gonna take that trade, the sell trade. So you're taking the trade against the liquidity. So you're going against what the market is showing you. You are going to be liquidated. So you take the sell here, and you're saying, okay, it's liquidity, I'm going to go against the liquidity. So you go down, you are going to get liquidated. Simple. It's the simple rules of the market, but sometimes we ignore them so much, especially in SMC, or we don't know them well. And this comes from, like, the only way you can be good at recognizing these levels is if you become consistent and if you are patient. The market sometimes creates liquidity while you are in a trade. You might get liquidated. We cannot control the market, but we can learn its patterns, guys. So sometimes, me too, I might be in a certain trade. Sometimes I might be in a trade, and then that trade, while I'm in that trade, the market creates liquidity and I get liquidated for some reason. we cannot predict where the market goes. Sometimes the market just moves how it wants to move. We just move with the patterns of the market. Get me, guys? So that's the first part, neglecting liquidity. So please, guys, learn liquidity levels, guys, because the market goes with liquidity. The second lesson is lack of confirmation. This sounds so basic, but yet it's not complex, but it's so important. It sounds like it's not even important. Executing or taking trades without confirmation is the most detrimental thing you can do in your trading career. This is one of the mistakes I made last year. It's like taking trades off the top of your head without any sort of confirmation. Guys, confirmation, guys. I always say this: learn your execution criteria. I learned this last year. They call it execution criteria. Learn how, what to seek before you take the trades. Let's say we're having this type of pattern, like a bullish pattern, right? Simple bullish pattern. You must learn once the price comes inside your order block. You must learn what do you seek inside the order block to confirm that, okay, this trade is going up or this trade is going down. Because you might just say, okay, here's another block, or let me just do this. Price is approaching this order block. Let's make an example with this order block. It's right here. Price is approaching this order block. So you just guess off the top of your head, and don't forget, within a swing point, there's many order blocks. So you might just say, okay, I'm gonna choose this order block, and hopefully price is gonna react off of that order block, and then it's gonna go up. You're just doing guesswork. You don't know, okay, what confirms my trade that, okay, you know what, it's gonna go up from that point there. It's gonna go up. What do I seek, or what do I look for when price approaches my order blocks? So you must learn that, guys. I always talk about the second entry confirmation, candle behavior confirmation. I've talked about that in my last videos. You can, like, all of these things, I think I've talked about them in my last video. So if you don't get these points, you must go through my last videos, guys. I've talked about this in my last videos. So just learn these things. Learn what confirms your trade, because if you don't have any type of confirmation towards your trade, you're gonna lose money in the market. You're gonna lose money. You are speculating. It's like what most people do in the when we trade fundamentals, when we trade news events. I know some people do. I really don't do it that much, but sometimes I do. But I have a different account for that. I have a speculative account for that. I don't do it in my main accounts. You must have a confirmation criteria. You can't just say price is gonna go up, and then from that point there, I can feel it. I sense it. I have a visualization. It's gonna go up from that point, and then it goes down because you don't know what you're doing. It goes down and then it goes up all of a sudden from a certain other point. So you must always look for the proper points. You must always look for the right execution criteria, the confirmation. Have things that confirm. Even if you don't trade you don't trade SMC. You could just trade normal trend lines. You trade the trend lines, and then once, let me do an example. Most people trade like this, right? Most people, when they trade like trend lines, we know we have a trend line break, right? We have a trend line break, and then what do you do when the trend line breaks? In most common knowledge, you would seek the sells again, right? If it's like a bullish and then it's breaking the trend line. If you're not an SMC trader, if you're just a normal forex trader, in what we were taught in the normal forex dynamic. So you don't know what happens. You just say, okay, it broke the trend line, so I'm gonna look for sales, and then price comes up a little bit to stop you out, right here, to stop you out, and then it goes down again. It goes down to what you were speculating. It goes down, but it does a certain move before it goes to your direction. So some people could say, okay, I'm looking for what do they call this? A retest zone. They call it retest zone. So some people who trade price action are very smart. They know their retest zones. They know, okay, after price breaks the trend line, it's gonna go to this retest zone and it's gonna come down to there. So you don't know, you don't have any confirmation, so you're just saying, okay, I know, I've seen this before. After it breaks the trend line, we sell, and then you hit sells, it goes up, stops you out, you get liquidated, and then it goes down to your direction. So these are just basic I'm giving you basic examples of what could occur in the market, guys. So always just learn your execution criteria. Confirm. Also, master the art of patience. A patient trader is a profitable trader. With patience, you wait for the right time to execute with less risk to your account. So if you're a patient trader, you will know that you have confirmations. Okay, I know I have to do this and this and this for my trade to confirm. Most of my trades, I literally wait for a long time. I wait for that right moment, the right moment for me to execute my trades, and it's been working out for me. Let me show you an example from literally this. From this trade, look where I executed my trade. Look, just take a brief moment to look where I executed. Look at the risk to reward from yesterday. This is yesterday's trade. I sent this in the WhatsApp group. From this, you have to wait for the right moment to execute, and sometimes it might stop. I guess maybe it might stop me out, but I waited for the right moment for me to execute my trade. I was patient. You always have to be patient. Same with this one. Which one was it? Yep, it was the GBP USD. The GBP USD, I had to be patient and wait for the right moment. Look where I executed my trade. If you're an SMC trader, you already know what's going on. You can see that price came into my order block. I did not execute my trade directly when price came into the order block. I never did that. I waited for the right moment. I went to the smaller time frames and I was like, okay, I want to see what price is gonna do inside the order block. Inside this order block, I waited. Look, price mitigated the small order block here and then went up. Look, it went up from this point. So I executed my trade here and I knew, okay, price maybe might come up here, down here, and then give me some sort of confirmation again so that I can execute. I looked for my candle behavior confirmations. I looked for my second entry confirmation. That's here. So you must always look out for your confirmations. Even here, I just took out a small risk entry right here for the GBP USD. I don't know what is gonna happen here, but you can see I waited for the right moment to execute. You wait for the right moment to execute. You don't just execute a trade off of the top of your mind. You wait for the right moment to execute your trades. That's how you're gonna be profitable in this market. That's the only way, if you are patient enough. You cannot hit sniper trades if you don't have the qualities of a sniper. A sniper is primarily when someone is a sniper soldier, their first task is to be patient. They literally wait for the right moment to take the shot. That is a sniper. So you cannot say, hey, I want sniper trades, but you don't have the qualities of a sniper. That has never happened. You cannot execute something if you don't have the characteristics of that certain thing. That does not make sense at all. So you cannot hit sniper trades if you are not a sniper. You cannot. I'm sorry, you cannot. So you must learn to be patient with yourself. You must learn to be patient to look for the right confirmation. This is very important. Very, very important. The third thing? The third thing is no back testing. Right? This is the mistake I did when I was starting out with SMC. Right? I was starting out with SMC, and usually if I would learn something with SMC or about SMC, I would jump into it without any back testing, without practicing my strategies or whatever that I learned from that phase, right? So every time I would learn a new strategy or way of trading, I would implement them in my trading before getting to know if they work or not. This is where back testing comes in. You have to back test. You have to back test in demo accounts. You have to back test and back test and back test and back test. Does this really work? If you learn a certain strategy, you must back test it first for at least a month or so. Depends on how you grasp knowledge, but you must really back test. So if you don't back test, the market is going to punish you because you don't even know what you're doing. You just found out a new strategy. There's many strategies I know, many. I don't even trade with that many, but there's many I know, even ones from price action. Many strategies that I can tell you about, but then I have to back test them first. In every strategy, you have to back test it and see if it works, right? You have to see if it works. What time frame does it work with? Those type of things. There's many things you would learn just from back testing. Simple things that you would learn from back testing. So always practice, and don't be afraid of making mistakes. Especially in the market, don't be afraid of making mistakes. Don't be afraid of being wrong. It's fine. If you are wrong, you are wrong. That's the market. Even the most top traders are not 100%. There's nothing like a 100% winning rate person in the market. The top traders that I know, the top traders, usually their goal is like just to win like 60% of the time, 60-70. That's where the highest that I know. I don't know about other people. The people I studied. So you have to practice, guys. You have to practice. Don't be afraid of making mistakes. You're gonna make mistakes in the market. You're gonna make mistakes. You're gonna be wrong, and it's fine if you're being wrong, because once you're wrong and once you make mistakes, you learn from that, right? So you have to learn. You have to become a better trader, or to become better at anything. You have to learn. You have to make mistakes. You have to fall. You have to blow accounts. Like, if you ask anybody who inspires you in trading how many accounts they have blown, sorry, you would be surprised. That maybe someone will tell you, I've been failing for like 2 years in trading. I was failing. I was not seeing where I'm going. But the third year, boom, I just made money. It's because consistency, efficiency, right? In some book I read, they call it the plateau of latent potential. You must just Google that, the plateau of latent potential. You must go learn that. But we're not gonna touch on that, right? So the other thing is marking out the wrong breaks of structures or changes of character, right? Now, this is a common mistake that people make and that I've made in the past, is marking out the wrong change of character. This led to a lot of down draw because I lose a lot of trades, right? So this is not, sometimes like in the market, you would say something is a change of character or it's a market shift, whatever you call it, right? The price is ready to change direction, right? And you marking out a certain wrong. Let me just make an example. So we're going on an uptrend. Let's say the market is doing this, right? It's doing this. Let me just leave it here. Let me just leave it somewhere here. Oh, sorry about that. So what you are saying is that I've seen that this seems like it doesn't make sense, right? Why would people do this? But a lot of people do this, right? We can see this is bullish momentum, right? We can see the market is going up. So in what most people teach is that if price breaks a certain a certain point or a certain swing or a certain low, it's ready to change direction, right? It's ready to change the direction. So you as a trader, you're gonna mark this out as a market shift, right? And then what's gonna happen after? Cool, you say this is a market shift. Out of nowhere, you say this is a market shift. And then what does price do? So if you say this is a market shift, you're gonna mark out a certain order block, right? Let me just make it so you understand clearly where I'm coming from. You're gonna mark out a certain order block as you are taught in SMC. Mark out a certain order block, and then you're gonna think price is ready to change direction to go where? To go to the downside. So you're gonna say, you know what, I think price is ready to go to the downside from this level. And then what does price do? Just goes down a little bit, and then boom, it goes up again. Continues its direction, guys. Continues its direction. So this is a common mistake some people make. This is a common mistake I have made, right? To say, okay, price is ready to change direction. Okay, price from this point it's gonna change direction, and that doesn't happen in the market sometimes. So what is my best advice for you if you're working with changes of character? Do this. Let's say it's a buy. It's a bullish momentum, right? So bullish. We have bullish momentum, right? And then what happens here? Price touches a certain order block, right? Price touches a certain order block. So we have an order block here from past movement. So when price comes into this order block, into this order block, we're gonna say, okay, maybe price might shift and start to go down on this order block, right? So what is your execution criteria? What is your confirmation that will tell you that, or what is the right market shift? Maybe price might do this. Once it does that, once price gives you something like this, it comes in the order block, and then after it comes in the order block, creates something like this, goes back in a little bit, or just goes somewhere here, and then it breaks. That's when you need to know that, okay, this might be a market shift. This might be a market shift. And then you're gonna say, okay, this is a market shift or a change of character. So price is ready to go down in what you are saying, in your speculation. Price is ready to go down. What do? You wait for price to come back again to a certain order block here. I've explained this so much, even to some of the students. I've explained this so much. This is called the second entry confirmation. Second entry confirmation. It's very, very easy. Then when price comes into this order block, into this second order block, you are ready to take your sales. You are ready to go short. So it depends what is your risk to reward. You can put it over on that high over there, and then put it on the low, or to certain levels of liquidity, or whatever you might see in the market. Depends, guys. Depends. Let me just make an example from a certain trade. Let me just make an example. Do I have the perfect example? Yes, I have the perfect example. Right here on this trade, I don't know if you can see properly. You can see price over here is bullish. It's bearish. Sorry, it's bearish. It's going down, right? So it's bearish momentum. So it sells, right? And then after that, it mitigated an order block. You can see this is a mitigation. It came into a certain order block. You can see. And then what did I wait for? Before taking any trades to say, okay, it's going up, it might go up on this order block, I waited. I waited for this break over here, where you can count this as a market shift. So this might confirm to you that, you know what, the market is ready to go up. It's good that I'm showing you from a live trade, a trade that I took, right? You see here, this is a market shift. So I marked this out as a market shift. After the market shift, what happened? After price went up a little bit, I marked out a certain order block below that market shift. I marked out a certain order block, and I said, okay, this order block is where I'm going to execute my trade. What happened? Price came directly to my order block, triggered my trade, and then went up. Gone. Like, it seems it seems basic, but it's so important, guys, to understand these concepts, because this is what you need in order to flourish in your trading. And this is what I've learned too. In order to flourish, you must learn these concepts, right? You must learn these concepts to learn how to mark out your changes of character, your breaks of structures, because your market breaks are essentially what you need in order to predict where the market is gonna go. You need those market breaks. You need them. You need to see, okay, where is price gonna go? What's gonna happen? Is it breaking again? Is it going up? Is it doing what? Is it doing up? Is it doing what or what? So you need to learn that, guys. So I told you guys, this is very simple mistakes that I did, but you can see they play a role. I've even showed you live examples of what I mean, what I'm talking about, guys. So guys, this is the last tip. This is the last thing I've learned. And all of these things that I've learned to not even master them. I won't say I master them, because sometimes it gets tricky for me too, but I've learned to understand them and move with them, guys. So all of these lessons, guys, you must really think about it, guys. You must really think about it and really try to understand what I'm talking about here, guys. Really, guys. And if you don't understand these concepts or whatever I talked about in this video, and you want to learn more about SMC, I have the perfect plan for you. This is the only way. This is the other plan I have for you. I've announced in the Simple Forex account, you can see, guys, we have a huge sale for Forex Masterclass, guys. This is where I will be teaching you how to trade SMC, guys. This is where I'll be teaching you how to become a more consistent trader, no matter if you are a beginner or advanced person in the Forex. No matter, because you have those people who know a little bit about Forex, a little bit about SMC, but they just don't see where it's going. They just don't see the results. I have the perfect plan for everyone. No matter if you're a beginner, you don't know what's going on, you don't know what's going on in the market, or you have a sense of knowledge but you don't see where your Forex life is going, you don't see what's going on, you don't see any results, you keep on making mistakes. So I am there to help you, guys. It started from the 1st of February. It's gonna close on the 15th of March 2024, guys. So book your spots, guys. Hit me up, guys. This is really important. This is a huge sale, guys. The biggest sale to start the year to become a better Forex trader. Forex Masterclass. Forex Beginner Masterclass, 400 Rand. Forex Advanced Masterclass, 350, guys. You can't beat that, guys. You can't beat that, guys. So guys, hit me up, guys, so we really dive into this, so that I can teach you one-to-one what really I'm talking about. What am I talking about? How to become more consistent. I'm gonna go with you through the market so that I can show you what I'm talking about, to teach you, to give you certain PDFs, notes, teach you one-on-one. So you tell me, okay, I struggle with this and this and this, I don't really understand this and this and this. We go through it again, guys. We go through it again until you understand, guys. So yeah, guys, hit me up, guys. Talk to me, tell me what's up, guys. Yeah, guys. So this is the perfect plan for you. I'm just giving you a tip, guys. Right? So guys, stick to your trading strategy and avoid making impulsive decisions based on emotions or market noise. Have a disciplined approach. Having a disciplined approach can help you navigate market volatility and achieve your trading goals. Implement risk strategies to protect your capital. Set stop losses to order limit potential losses, and consider position sizing to manage risk exposure, guys. Markets are dynamic, so be prepared to adapt your trading strategy based on changing market conditions. Stay flexible and continuously refine your approach. The market changes, guys. The market continuously changes. We go through recessions, we go through what, but if you are a skilled trader, if you know what you're doing, you'll go with the market, you'll go with the flow, you learn how to flow with the market. Don't you realize, especially before COVID, there were so many traders making money, or so many traders that you might have known before COVID, And then once the market shifted and it adapted to certain conditions, there were not many people trading anymore, or people making that type of money. It's because people cannot flow with the market. You have to be like water, like Bruce Lee said. Be like water. You have to flow, to flourish in any environment. You see, guys, so that's very important. Track order flow if available, as it provides insight into buying and selling pressure in the market. Large orders executed by institutional traders can reveal potential areas of interest. That is liquidity. We are talking about that large orders executed by institutional traders. That has something to do with liquidity, guys. So guys, I told you this is not gonna be a video. So yeah, guys, thank you so much for watching. This is the end of the video. If you don't understand anything about the video, or if you didn't understand, or if you want us to like go through some stuff again, guys, we can go through it, guys, you know. So yeah, guys, we can go through it again, and I can show you in the DMs like, okay, this and this and this is what I was talking about, guys. This is 36 minutes long. I didn't expect it to be this long, but yeah, guys, I had to emphasize a lot, guys. So thank you very much for watching till the end of the video, guys. Yeah, guys, see you on the next one, guys. Thank you.